Did you know that in the fiscal year 2024, the US government collected a staggering $5.1 trillion in tax revenue? This money funds public services and education and infrastructure, roads, even the military costs, and many more things that the government does. But what do you think will happen if the government decides to eliminate this massive revenue stream and replace it with a much smaller uh, alternative that is only about an average of 2% of this revenue? Well, that is exactly what Mr. Trump, the president of the USA, is proposing these days. On the very first day in office, Trump released a memorandum called the America First Trade Policy. So, this memorandum or this document actually laid out of his vision of how he wanted America to conduct its trade. So, one of the most intriguing parts of this memorandum comes in section 2B, where Trump proposes the introduction of the External Revenue Services. ERS. The idea behind the External Revenue Service, the ERS, is to act as a repository for collecting tariffs that Trump believes that he'll collect tariffs from the foreign trading partners of the USA. These funds will be channeled towards funding his ambitious Make America Great Again MAGA initiative. So, in essence, for now, we can understand that the External Revenue Service is meant to collect taxes from foreign trading partners of USA, and it can replace the taxes that the IRS collects from its citizens or the US citizens. Now let's check some background on this, like what are the taxes and what are these tariffs that we are talking about here, so that things are clearer to us. So most countries rely heavily on the taxes collected from their citizens. This tax acts as a revenue for the government, which, as we mentioned earlier in the video, is used by the government to fund the public services, to build roads and infrastructure, to fund education, research and development, military defense, and all these expenditures of the government. In the USA, the IRS or the Internal Revenue Service is responsible for collecting these taxes from the US citizens. But here's the deal. While the Internal Revenue Service or the IRS collects the tax revenue from the US citizens, a small portion of the total revenue that the US government gets also comes from the tariffs that are charged from businesses or US domestic businesses which import goods and services from foreign vendors. So there is a tariff that is charged from these domestic businesses if they are importing goods and services from foreign vendors. The Customs and Borders Protection or the CBP is responsible for collecting this tariff from the local businesses in USA, those businesses which import goods and services from foreign vendors. So basically it works like this. So if, let's say, a car manufacturer in USA imports car accessories from Canada or Mexico, so then the US government will charge a tariff on the total cost of the imported car accessories. So if, let's say, the car manufacturer imports $1 lakh of car accessories, then let's say if a 10% tariff is charged, then the business will have to give as tariff $10,000 to the US government. However, as we spoke earlier also, this tariff revenue from the businesses is pretty small, in fact significantly smaller as compared to the tax revenue that the IRS collects from the citizens, the income tax revenue. For instance, in the fiscal year 2024, the IRS, the Internal Revenue Service, collected a total revenue or total tax of $5.1 trillion, while the US Customs and Border Protection, they just collected $77 billion, which accounts for 1.57% of the total federal revenue. So this uh, tax revenue that the CBP collected is 1.57% of the tax revenue that the IRS collected. So as you can see, this is a significantly smaller amount as compared to the total tax that the IRS collects. Historically also, if you'll see, these tariffs account for an average of 2% of the tax or the income tax collected by the IRS. Rather than using these tariffs as a major contributor to the revenue, the US government and all other governments also in the world use this tariff revenue or use these tariffs as a tool for having better negotiations or having better deals with their trade partners, and also they use it for promoting the domestic industries or the domestic businesses. Because what happens when you increase the tariff, then businesses tend not to import goods and services from foreign vendors, and they come back, return to the domestic vendors for their needs of goods and services, which promotes these domestic businesses. So let me ask you now, do you think it is feasible now for the Trump administration to eliminate the revenues from the taxes and replace it with the tariff revenue from the businesses? Do you think it will be feasible to replace IRS with the ERS, the proposed ERS, External Revenue Services? Or at least do you think it is more feasible to rely more on the tariffs and lesser on the income tax revenue that the IRS collects? So there are few concerns. First is, will this new stream of revenue from tariffs will come even close in scale to the revenue that is collected by the IRS? Like as we saw in the fiscal year 2024, IRS collected $5.3 trillion in revenue, in tax revenue, and the CBP, Customs and Borders Protection, they collected $77 billion, which was 1.57% of the IRS revenue. So will this gap can be filled, or this gap can be lessened? Let me explain this to you further. So when import taxes or the tariffs increase, the US businesses or the domestic businesses, they face higher costs for importing the goods that they were importing earlier. Now this can lead to a couple of different outcomes. First thing is that many domestic businesses might decide to stop importing these goods altogether. So this is when they can find a cheaper alternative that is produced by another domestic business in the United States of America itself. Second scenario is when they cannot find a cheaper alternative or an alternative in the US, then they have no option but to get back to their foreign vendors. They might go to their foreign vendors and ask for the prices to be, and ask them to lower the prices of the goods that they are importing. After all, they need to offset this extra burden of the tariffs from themselves. So they'll get back to their foreign vendors and they'll ask to lower the prices of the goods. In this way, when the foreign vendors are pressured to lower their prices, they actually sacrifice by shrinking their profit margin. And over time, this might discourage these foreign vendors from exporting altogether to the US. I mean, they will try to find other trade partners other than the US, because now in US they are realizing lesser of the profits. And if this trend continues, we might see a decline in the volume of these imported goods in the US. And if the volume of this these imported goods decline, then eventually what happens is the tariffs collected are also reduced. So it would not be at the same level, the tariffs would not be collected at the same level as they are collected now. In essence, the higher tariff leads to a cycle where both the foreign vendors and the US businesses are negatively impacted, uh, uh, which ultimately leads to affecting the availability of these goods in the market. And as you can think, this can lead to inflation because of lesser availability of goods in the market. Let's talk about these challenges in more detail that we just discussed if this ERS proposal is materialized. Like, I can see only the challenges with this, so I will discuss these challenges with you. And I'm living in Canada, and I can right now, see, the economy is low and the prices for the grocery and other items are inflated. So if this materializes, then of course Canada will be impacted. But with Canada, US also will be impacted, and that's what I'm trying to tell you in this video. So let's see the wider challenges that US can face if the ERS is materialized. So first off, we'll have to ask, will the ERS, the External Revenue Service, will be able to match the scale of revenue collection as that is done by the Internal Revenue Service or the IRS that collects the income taxes. As we have seen the data, the these tariffs only account for a very small portion of the revenue that is collected by the IRS. It averages about 2% of that which is collected by the IRS. That is actually a very tiny slice of the pie compared to what the IRS collects from individual taxpayers. Now let's talk about who actually bears the burden of these taxes or the tariffs that the ERS would collect if materialized. While the foreign vendors will feel the impact of the ERS if the tariffs are increased and ERS is formed, but it is the domestic businesses which will have to bear the cost of these increased tariffs first in the USA. They will have to pay these tariffs. So when tariffs are raised, there are few possible outcomes. Let's discuss these. First outcome or first possibility is absorbing the cost by the US domestic businesses themselves. So in this case, the US domestic businesses might absorb the extra cost of the tariffs, which means they'll have to squeeze their profits. For example, let's say a US business, a US domestic business, is again importing $1 lakh of car accessories. Then, with a 25% tariff, which is raised, let's say the tariff is raised to 25%. So, this business now will have to give $25,000 to the government. So, now the business can absorb this cost. Now where earlier when it was paying $1 lakh, now it is paying $1,25,000. So it can squeeze its profit and uh, absorb this extra cost by itself. It is not maybe ready to push this price to the consumers or the foreign vendor. It absorbs the cost by itself. Second is, of course, as we alluded to the fact that these domestic businesses can push the extra burden of the cost to the consumers. They can push some of the cost to the consumer or a partial cost to the consumer or the full extra cost to the consumers. So now the prices of the final goods will be raised. So inflation will happen. And third is they can pass on this extra cost to the foreign companies rather than passing it to the citizens or the consumers in USA. They can pass, I mean, the domestic businesses can pass this extra cost to the foreign vendors from which they are buying these goods. In this option, what will happen? The foreign vendors will have to squeeze their profits if they want to continue to do business with the US domestic companies. Another much practical scenario is a combination of all of the three of us. Like it can also happen that some of the cost is absorbed by the US domestic business, some of the cost is passed on to the consumers, and some of the cost is passed to the foreign vendors. So a mixture of all these three possibilities can happen. And this is much practical and this is what really happens most of the times. Now let's consider another point. In USA, as we already spoke about, we already have the Customs and Border Protection CBP, which is responsible for collecting tariffs from businesses which import products from foreign vendors, right? So how come you think will the ERS justify its existence with similar responsibilities or duplication of responsibilities as the CVP. It will be actually interesting to know how this turns out or how this plays out in the future. We'll see. But for now, this is a big question. Like, how will the ERS do something different or some added responsibilities? How will it be shaped? So, this is a big question. Finally, we also need to think about the broader implications of these uh, contentious measures by Trump. In fact, the intensification of these tariffs and creating an ERS could act as a lever which can isolate the USA from the global trading ecosystem altogether. US businesses have established trade relationships with foreign countries to source and procure cheaper labors, cheaper goods, which actually lower the cost of production for these businesses. In fact, the trade setup with countries like Canada and Mexico, the neighbors of USA, is so integrated that there are multiple trade movements across the border for the production of the same individual, same product. For the production of the same product, there are multiple movements. For example, in the car example I gave you, a car manufacturer might import car accessories from Canada, assemble it in USA, and then again finally the final assembling and the finishing of the car happens in Canada. So there are multiple trade movements happening between to and fro between Canada and USA, and likewise for Mexico. So if the tariff is raised to something that is unprecedented, and if a body like the ERS is formed, these trade relationships could be disrupted, which will be which will not be good for USA also and for the trading partners also. But for USA, it needs to think that it should not get, as we said, isolated from the trading ecosystem that is followed across the globe. In summary, while the idea of an external revenue service (ERS) sounds intriguing, the challenges that it presents uh, can be significant, could have significant implications for both domestic businesses and the international trade. I'll present this next slide and you'll see, I'll give you some like 10 seconds and you can read what experts have to say about this. Most of these economists and experts are not in favor of this proposition. So just check it out. Okay, so that is it for now for this video. If you liked it, please like and subscribe as it will motivate me to present more videos of this kind which is backed by data and solid research. Also, please comment your thoughts on this ERS. What I came to know about ERS, this is a proposition that is not good for USA and for other parts of the world also. What are your comments on it? If this is something that is uh, not in alignment with my thoughts, please let me know and let's keep this interaction on. Thank you and have a good day.